Investing looks easy until it's not. Ever felt like investing is just a few clicks away? That's because trading platforms make it look effortless. Just sign up, deposit money, and start buying stocks. What could go wrong? Well, a lot. With the rise of DIY investors, more and more people are diving into the market without formal training, thinking they can figure it out as they go. And while learning from experience is great, in investing, mistakes can be very expensive. So let's talk about what's happening with DIY investors, the common mistakes they make, and most importantly, how to invest smarter. So hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So yeah, investing feels easy when the market is booming. You buy stocks, you watch them go up, you feel like a genius. But what happens when the market drops? Many DIY investors suddenly realize they have no real strategy. So here's the problem. They bought stocks without researching fundamentals. They chased hot tips instead of building a solid portfolio. They took big risk in options trading without understanding the downsides. And when markets fall, panic sets in. Many investors rush to sell their stocks at a loss, while others hold on, hoping for a recovery that never comes. Without a plan, it's easy to make decisions driven by fear instead of logic. That's why having a strategy before investing is crucial. A strong foundation can protect you from making panic-driven choices when things get tough. So let's be honest. When stocks are going up, investing feels like a game anyone can win. But when markets crash, the truth comes out. Overconfident investors hold on to bad stocks for too long. Some try to average down on losing positions, making the mistake even bigger. Others double down on risky trades to recover losses and end up losing even more. And the worst part, by the time they realize their mistakes, their capital is already gone. So this is the point where many DIY investors give up on investing entirely. They assume the market is rigged or too risky, when in reality they just lack proper knowledge and risk management. But here's the thing. Every investor makes mistakes. What separates successful investors from those who fail is how they respond to them. You see, mistakes in investing aren't just about losing money. They also mess with your confidence. When you lose money on bad investments, self-doubt creeps in. Should I have sold earlier? Should I have invested in something else? Or do I even know what I am doing? This self-doubt leads to a cycle where you either avoid investing altogether or become overly cautious, missing out on real opportunities. The cost of learning through trial and error isn't just financial, it's also emotional. That's why some people never return to investing after a bad experience. They get burned once and decide it's too risky. But smart investors don't let past mistakes define them. Instead, they learn from them, refine their strategies, and come back even stronger. Every experienced investor will tell you learning from the market is inevitable, but learning the hard way is optional. Instead of making costly mistakes, start with a solid foundation. Understand market cycles before investing. Learn risk management so you don't wipe out your capital, and build a portfolio the right way, not based on hype. Many seasoned investors took years to correct their early mistakes. The good news, you don't have to go through the same struggle. You can learn from experts instead of repeating the same errors that have cost investors millions. If you have made investing mistakes, you have two options. Number one, go back to the basics. Learn investing properly through courses, books, or structured mentorship. Number two, seek expert help. A financial planner can assess your portfolio, fix mistakes, and guide you towards smarter decisions. Or you can do both. This is the fastest way to get back on track. But whatever you do, don't wait. Every day spent not fixing your mistake is a missed opportunity. Market cycles shift, and the best opportunities won't wait for investors to catch up. The sooner you act, the better your financial future will look. Ever bought a stock just because a financial influencer said it was a sure thing? You're not alone. With investing content everywhere like YouTube, Twitter, Instagram, it's easy to feel confident just by listening to someone who sounds like they know what they are talking about. But here's the thing. Conviction isn't something you can borrow. When markets are booming, following someone else's advice feels great, but when the market dips, doubt creeps in. You panic, you sell at a loss, you regret it later. Meanwhile, the influencer who recommended it, they have moved on. So why does conviction matters? Successful investors hold on during tough times because they believe in their investment, not because someone else told them to. If you don't understand why you own something, you will never have the confidence to hold it when times get tough. This is why self education is crucial. Learning the fundamentals before you invest can help you develop real conviction instead of blindly following trends. Let's be real. Every investor has scars. Even the best investors have made painful mistakes. The difference, they learned, adapted, and took action. A bad portfolio won't fix itself. Ignoring mistakes won't make them disappear. Waiting too long means missing the next big opportunity. So, the best time to fix your investment strategy is now. So, click the link in a description and take control of your financial future today. And what is the final takeaway from this video? You see, investing isn't about quick wins, it's about long term success. Anyone can make money in a rising market, but true investors build wealth that lasts. That's why the most successful investors didn't avoid mistakes, they learned from them. They didn't quit when they lost money, they didn't blame the market when things went wrong. They took responsibility, learned, and adapted. Every great investor, whether it's Warren Buffett or someone managing their own savings, has had painful learning moments. But instead of letting setbacks define them, they use those experiences to improve. Now it's your turn. If you have made mistakes in investing, you are not alone. What matters is what you do next. You can continue experimenting, hoping to figure it out on your own, or you can learn from expert and avoid years of costly trial and error. The choice is yours. But remember, every day spent without a solid investment strategy is the day your money isn't working for you. Click the link in the description for a free consultation with one of our certified financial planner and start investing smarter today. And if you find this video interesting, give it a like, share, and subscribe to our YouTube channel. So yeah, thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.